Does the stock market crash this time of year? Is there seasonality to the stock market? And if you ask most people who've been around the stock market the last 10 years, last 20 years, or hopefully, you know someone who's been trading. Thankfully, I know so many people who were in the trading floors, the 80s and 90s. There's this idea of seasonality in the stock market that I think everybody can speak to and joke about a little bit, but I wanted to test today if it's real. And that usually goes something to the tune of, April, May, a little bit of a bid. In the summer, low volatility, not so much action. And then in September and October, in the fall, everybody comes back and there's usually some volatility historically to the downside. That's the colloquial way of the anecdotal way of thinking of things. And today I wanted to put some data behind it. We have a ton of data to see if there's some seasonality in the stock market. And if, now that we're in that September, October, November stretch, is the market due for a crash? Because that's, we've seen some of these crashes historically, especially going back to the huge crash of 87 and the biggest down day in Dow Jones history. October 19th, 1987, fell on a Monday in October. And this is an index that dates back to 1885, which is so wild. We have so much data on this stock market benchmark, the stock market essentially here, the Dow. And the biggest day, 22.6% lower, occurring on October 19th. And we're right around that day. It's essentially the anniversary of that. Of course, we've hit October 19th, but every one of these Mondays here in the fall kind of feel like, are we going to get that big move again? And so I wanted to put some data around this time of year, and then also take a look at daily moves. What might set off such a move as more than 20% lower? Have not seen one of these since. And it was interesting as I was doing my research. Black Monday, while it did kind of come out of nowhere, it was preceded by 3 days in a row lower. The Dow Jones was starting to move lower on fear that ended up seeing Black Monday through to a much larger extent. But yeah, the prior Wednesday, Thursday, and Friday moved lower. And just recently, the Dow Jones lost about 3% and moved lower 3 days in a row leading into this most recent Monday. Did we get another Black Monday? No. But definitely worth taking a look at that. Of course, these big moves do, in the broad scheme of things, come out of nowhere, but there is a little bit of shakiness that the market witnesses going into such a huge event like we saw in 87. And so now I want to look at this seasonality here in the stock market and see if this market is due for a crash as we enter fall and winter. Because, yeah, you look at the Dow Jones over the course of the last 20 years, and you might remember, some of the volatility for the financial crisis kicked in around September, October of that year. You go back to the dot-com bust, and you can see a similar seasonality of, that fell on this part of the year, because these crashes occur so quickly. As we just saw, the Dow can lose 20% in a day. These crashes can occur in 1 month, 2 months, and then, like the financial crisis you see there around 08, take years to regroup and get back to all-time highs there. And so I put together the data, the average S&P 500 performance by month. And what we found, especially if you're looking at that October, November, December, you're worried about a crash this time of year, is actually over the course of the last 30 years since 1992, and I went to the S&P by the way, just because it's the current benchmark. The Dow Jones, of course, was benchmark for so many years. Recently, S&P is that benchmark, and I just had 30 years of data for the S&P versus about 20 years for the Dow Jones. And actually, in October, November, and December, some very positive historical returns in those months. And in fact, November, out of the 12 months here, was the best average performer, up 2.3% on average going back to 92 in the month of November. Also worth noting, April up almost 2% on average, and July also up almost 2% on average. So, we're due to have a negatively performing October here. There's been some shakiness in the market. Doesn't look like we're going to get that positive 1.3% like we have on average historically. But this time of year actually doesn't have any kind of negative seasonal connotation to it. Historically speaking, quite the opposite. And in fact, and maybe this is how things work a lot of times, is by the time one of these trends kind of picks up steam, you see a fall time of year that's negative a couple of times, and you start to correlate it to a month. It's actually it's happened a little bit earlier than you think. It's worth noting that August and September were the worst performing months here. Two of the only three negative months out of the year on average in the S&P over the course of the last 30 years. And it's definitely worth noting that if you're going to only have 3 months that on average perform poorly for the S&P, them being back to back is kind of significant, especially when the only other month, February, that is negative is essentially unchanged. It's a rounding error off of zero, negative 0.1%. So maybe this idea recently of, October and November, the fall, being some of the worst months of the year, it's actually a little bit before that. August and September, for whatever reason, have seen some negative performance. And actually, there's a bit of a bounce back usually in October and November and December. And that makes sense because this is one of the, recent market trends that I definitely have done a ton of research on, and I think it has started to become really kind of a well-founded theory around the market, which is that stocks tend to bounce back depending on what kind of time frame. Are you looking at daily? Are you looking at weekly, monthly, yearly? The stock market tanks in 07 going into 08, and then some great years coming out of that crisis. Same with the .com crash as well. Same with, you look back to the pandemic, early 2020, some of the worst months in recent history there in March and April, and then some of the best months in recent history right after that. And then I put together the data here, and it's the same data set going back to 1992. And I took a look at daily performance on average, and all days is, essentially a rounding error off of 0%, but obviously in the positive, given that the S&P has been up since 1992 to now. Interesting, though, that performance on average was doubled the day after a down day. And then after I filtered for the day after a negative 1% or greater down day, that performance was, again, almost doubled from just any old down day. And then the cherry on top here is the average performance the day after a 1% up day or more. So a big, good green day. The stock market actually did tend to reverse on those days on average by a small amount. But speaking to this idea of bouncing back in the stock market, so are we due for a crash here? Historically, on average, October, November, some of the best performing months. Also, something to keep in mind, if October is a worse performing month here, or November is a worse performing month than historically on average. Stock market tending to have this bounce back. Of course, this is all to say that these stock market crashes can come out of nowhere. So seasonality in the market, not so much. Are we due for a crash? Historically, not a case to be made there, but we'll definitely continue to watch this market volatility as it escalates.